That's what I wish crypto was like. But it's really just like all these like goofy haired, crazy neon light internet people and offshore mysterious veiled characters. I'm going to start my own community called Crypto Y'all.
They're awesome. You have built something incredible.
Because it's internet, because it's digital, because it's super accessible, all the Bernie Madoff Juniors are out there too.
Josh, welcome to the show. I can't wait to dive into the world of crypto with you.
Well, hey, excited to be here. Honored that you'd ask me.
Absolutely. I find what you do so fascinating, and I'm excited for you to break it down for us today. But before we dive into crypto, I want to know a little bit more about you, Josh. How did you get into the whole crypto world, and what gave you the idea to start Crypto Y'all?
Okay, so I'm going to make a really long story short.
Okay.
I'm from rural Alabama, first person to go to college in my entire lineage. So we don't speak Ivy League. We don't have a big pedigree of financial literacy or anything like that. But I did know how to swing a baseball bat for a little bit. That got me into a 4-year school. And when I got out, though, I still wasn't financially literate, and I started reading books like Rich Dad, Poor Dad by Kiyosaki. And I know a lot of people listening to this or probably look to that as a paragon of passive income. And it changed my life like it does everybody else. And I started small businesses. I started investing in real estate. I started doing things and messing up and screwing up and failing fast, and became a father and a husband, and then started finding success. Then I discovered crypto about 7 years ago, and what I discovered in crypto was an asset class that largely resembled real estate. A lot of people think of it more like stocks because it has ticker symbols and stuff like that. But when I started looking, when I kind of lifted the lid, I was like, wait, this is really actually more like a productive asset that you can create more productive assets with, aka cash flow, appreciation, leverage. All of those characteristics are present in the crypto blockchain digital asset world. And I fell in love with it. I think because I first fell in love with real estate. And so, but here's where the crux of the matter is this: because it's internet, because it's digital, because it's super accessible, all the Bernie Madoff Juniors are out there too. So there was a lot of scammy, smarmy people. And I was just like, I was looking for the other dads and husbands and like normal people. You know, I'm a nerd with a polo shirt on every day. And I was just looking for the other people with mortgages and small businesses and aspirations for retirement to talk about crypto with. But there wasn't anybody. And I was just desperate to just, because like I grew up in an environment where hospitality was like second nature. Not that we were better than everybody else, but just wanted to bring that human, like, y'all come on in and stay a while was a phrase that I heard at my house a lot. You know, when people were there, we invited them in, we talked to them about their lives, and we shared meals with each other. And I thought, man, that's what I wish crypto was like. But it's really just like all these like goofy haired, crazy neon light internet people and offshore mysterious veiled characters. But I know it's a legit asset class. So I said, you know what? I'm an entrepreneur. I like to solve problems. I'm going to start my own community called Crypto Y'all. And it's just going to be like, y'all come on in and let's do crypto for a while together. And now you and I are on a podcast. So that's it.
I didn't realize all that. I had no idea that's how you started the group, but it makes sense now knowing you, knowing that story. So how long ago did you start Crypto Y'all?
3 years ago.
Okay.
And it's awesome. It's a great group of people. All of them, you can't join unless you go through me first. It's not one of those things where I'm looking for 1 million customers and trying to be the Mickey Mouse of crypto. It's very boutique and white glove and interview only kind of thing, but it's a blast, and it's a bunch of people who are trying to make generational wealth and change their lives and change the world around them, you know, with increasing their net worth, and we're having a good time doing it.
I love that. And hats off to you for creating something so awesome.
Thanks.
And we'll get into it more later, but
Sure.
I've met a lot of the members of your group, and I got to say they're awesome. You have built something incredible. Like, they are a group of very kind, genuine people that are very smart. They understand the power of what I do, which not everybody does, and
Yeah.
they're just awesome. I mean,
Yeah.
I've met,
Thank
I
you.
mean, not I haven't met your whole group, obviously, but I've met a large number, and I just, I mean, I'll be honest, my whole team fights over any crypto y'all deals because
That's good.
they know they're going to be great people to work with. So you've
Great.
definitely taken who you are and imparted that in the rest of your group, and that's what you've attracted, which is hard to do. So that's
Yeah,
awesome.
thank you.
Absolutely. So now that we know a little bit about you, I want to dive into the hardest question of all.
Yeah.
Can you explain in the simplest terms what is cryptocurrency and how does it fundamentally work? Like, if you were explaining it, well, basically to a dodo like me that knows nothing about it, how would you explain it?
Well, there's two ways to explain it, in my opinion. There's the nerdy tech way to explain it. And then there's the investment kind of bucket, if you will. And I like to start in the investment bucket because if you start in the nerdy technology side, you can get a lot of glassy eyed stares. Um, but the way I look at crypto, and this is going to sound really unsophisticated, but the way I look at crypto as an investor and as a capital allocator is I think about Amazon and Microsoft and Apple back in the 90s. And I think, what if we could buy shares or ownership of those tech companies back then? That's basically like what you're doing with your money now. Now, on a technical level, it could be argued that that's not true. And honestly, it's a case by case circumstance, but like, really, we're just buying into a technology, and the specific technology that's shared across all cryptocurrency investments is blockchain. And blockchain is simply an open ledger technology. It's kind of like bookkeeping made out in the open, that people can watch transactions and see transactions. It's kind of like the most private, least private way of tracking the flow of money ever created. But it's not just about the flow of money. Blockchain technology is going to revolutionize, honestly, every sector. Like, we'll be tokenizing most everything. We're already tokenizing real estate transactions. We'll tokenize the stock market soon enough. And we're already tokenizing fiat currencies, and the way it's actually accounted for and who owns what in a what we call a quote unquote trustless environment, meaning we don't need third party institutions to tell us who owns what. So that's really what we're buying into. And then there's 2 million different cryptocurrencies out there. Some of them are absolute scams. Some of them are legitimate utility-based business enterprise value organizations. Some of
Mm-hmm.
them are super centralized and some of them are absolutely decentralized. It's a massive spectrum. I always tell people it's kind of like walking into Baskin Robbins and there's all this ice cream. It's
Mm-hmm.
all ice cream, but it doesn't all taste the same.
Mm-mm.
It doesn't all appeal to everyone. And so that's where it can be overwhelming if you approach it, blindfold. A lot of people kind of treat it like a slot machine, and they walk into it like a casino, and it's like, okay, let's put $5,000 on red and spin the roulette wheel, or just pull the slot machine and hope we get lucky sevens, and that's just not it. So, but the reason why that happens is because it's accessible. It's fractional. You can invest $1 or $1 million in the next 1 minute if you wanted to in crypto. It's very, very accessible. Unlike commercial or residential real estate where you have to have down payments and
Right.
underwriting processes, all the stuff. But in crypto, it's very fractional. But because there's a low barrier of entry, you can get tripped up in things that aren't worth your time or capital. And so it's important to be informed as you approach the asset class. So I don't know if I answered your question,
Well,
but
but you did. I'm just curious, and I apologize, but I think I'm speaking for others in my ignorance, what are you actually buying? Like, if I'm investing in it,
Oh
what am I
yeah.
investing in? I don't understand that part.
So you're in 99% of the cases you're buying a token or a coin that represents a particular circulating supply is a
Okay.
key word. So if your listeners are brand new to crypto or stocks, it's how many stocks or how many shares are available in Berkshire Hathaway, right? Well,
Okay.
how many tokens or coins are available when you're investing in a particular. The famous one obviously is Bitcoin,
Yep.
and it's the easiest one to kind of gravitate towards in this conversation. Bitcoin has 21 million fixed number of inventory, if you will. And so there's only 21 million. There only ever will be 21 million. And it's kind of dictated by or preordained, if you will, by the original code of the Bitcoin network. And another thing is like people feel like they're not buying anything. It's not quote unquote tangible. And
Right.
so I think this is the other side of your question is like, are we buying intangibility? Well, no, like when you buy shares in a company like Apple or Berkshire Hathaway, technically you can't touch those shares, but you
Mm-hmm.
can touch an iPhone or you can touch Dairy Queen, which is owned by Berkshire Hathaway. So there's tangibility there. In Bitcoin, it's really no different. Bitcoin's the largest computer network on the planet in terms of hardware tangibility. So, put Google and Amazon and all those server farms together, and the Bitcoin mining network, that is the hardware computers that uphold and validate all the transactions worldwide, it's the largest in the world, and it's never been hacked. It's never had downtime. It's impermeable so far. And so that's why you see massive Wall Street institutions, the biggest wealth funds on the planet, like BlackRock and Fidelity and the 11 other hedge funds that have gotten in on it. They're now trading Bitcoin actively, and the inflows are much, much larger than any other ETF in history. So it's a very much validated and
Mm-hmm.
legitimate asset class because of that.
Wow. I'm getting a good understanding. So it's cracking in there a little. And I know you mentioned you think of it like real estate, and I'll be honest, real estate's a big piece I understand. So I'm curious, how do you feel like the two are similar?
So I think it is as simple as, when you start thinking about assets,
Mm-hmm.
the word asset. It's like when I graduated high school, I didn't know what an asset was. Um, Assets and liabilities, profit and loss statements, balance sheets. A lot of business owners probably get um, inducted into that reasoning or that understanding sooner. But even if you're an employee out there listening, owning assets are what make you wealthier. And so crypto are exactly that. They are digital assets. They're blockchain based assets. And so it's kind of like owning a home if you own some Bitcoin or own some Ethereum or take your pick of whatever other token. And then obviously the different tokens outperform each other or underperform in relation to each other. So then it's kind of like buying real estate on one street versus another street or one neighborhood versus another neighborhood. And then you've got equity, how much of how much of the 21 million Bitcoin do you own? Well, how much of that home do you still owe the bank and how much of it do you own outright? How much cash equivalent value do you have and how much has it appreciated in value? And how much is it cash flowing you? How much is it a productive asset or a non-productive asset? Warren Buffett makes this great comparison uh, when he talks about non-productive versus productive assets. I think it's Warren Buffett. Somebody can fact check me, but basically, you got a block of gold and you've got some farmland. Block of gold has value. Obviously, it's a precious metal. Price goes up, price goes down, but it can't make more gold. That block of gold is not going to reproduce itself, like Gremlins back in the day. There's an 80s flashback. Um, but then farmland has the underlying asset. You've got the equipment, you got the land, you got the buildings, but also you can cash flow the crops and the livestock basically into perpetuity. So it's a productive asset on top of the underlying asset. So with crypto, you can actually do the farming as well. We can use our Ethereum, our Bitcoin, our Polygon. I can list all these other names of tokens that some people may have never heard of, and we can go we can farm it. We can do what we call yield farming, and we can lend it, and we can basically be Wells Fargo. We can be Bank of America. We can be JP Morgan
Wow.
Chase. And so what blockchain technology is really doing is it's democratizing the way the money system works, and it's taking the power out of the central bank's hands, and it's putting it in the hands of me so that I can go earn 400% APY by lending my quote unquote crypto or my digital assets to decentralized exchanges that need liquidity, because they're making money by swapping and lending money. So I'm getting a piece of that. Again, it's a democratized form of banking. And that's what the technology is really allowing me to do. So going back to your previous question, what am I buying? Well, you're buying tokens and coins. You're building equity in things that I'm then able to go make cash flow and appreciation and get that accretive value from. So that's where we start slipping into the nerd talk a little bit.
I like the nerd talk. And you kind of answered it, but what would you say, what problem was crypto created to solve? Like, and how do you feel like it's changing the way we look at and think about money?
Well, the very clear problem that many listeners will remember is the 2008 financial crisis, wherein we had the too big to fail banks. And I was putting a for sale sign in the yard of a fix and flip the day that Bear Stearns went under. And I was sitting there going, what have I done? I was like, interest rates and all of like banks were closing and the stock market was crashing. And that was 2008. Well, what happened in 2009? Well, I believe that history changed forever. It was basically the equivalent to Gutenberg launching the new printing press. Like, this was when the Bitcoin white paper came out and the Bitcoin network there following launched. And it was a reaction to the central banking system. And it was meant to be a peer-to-peer democratized system that no central power, tyrant, greedy corporation could control. And that was the problem that Bitcoin, quote unquote, was solving. And even now, 14, 15 years later, people are still like, the innovation of Bitcoin still not really landed on the brains and the minds of the people it was created for. And it'll continue to, adoption has been as fast as the internet has experienced, but it will continue to learn and understand more as sovereign nations adopt it as their legal tender and so forth. But like I was saying, Bitcoin was just kind of the vanguard. It was the first one out of the gates. It's the first to market. It's the largest market cap. But now we have tokens that allow you to sell your real estate on chain and own NFTs that represent the deed to your house. And, there's so many more like real world assets that are being tokenized. We have cell phone towers now that are managed through blockchain technology, and we have supply chain management being done on blockchain. And so you're going to continue to see the opportunities abound in crypto. And it's just a matter of, are you going to be in the know or are you not going to be in the know?
It's a good way to look at it. Absolutely. I want to make sure I'm in the know. This is helping. And so you just mentioned blockchain, and I know that's mentioned a lot when you're talking about crypto. Can you tell me, what is blockchain and how does that work together with crypto?
Yeah, I think the best way I understand it and the best way I like to explain it is, think about railroad tracks. Think about all the different railroad networks we have in the United States or in Europe. It doesn't matter geographically where they are. You have this foundational platform or railway in which transportation goes back and forth. Well, when I think of blockchains, and I'll just name a couple that I've already named, like Ethereum is the largest smart contract blockchain in the world. You have Polygon, you have, so dozens of other quote unquote blockchains. Solana, again, I'm not shilling any particular tokens here. I'm just talking about some of the more well-known ones. Well, each of those, Solana, Ethereum, etc., they are blockchain railroads. And on those railroads are the tokens. That is the protocols or the projects that are built, the trains that move, that create the commerce and the economy that's built on top of those blockchains. The blockchains themselves are just the underlying technology that then developers can come on top of and build. And that
Mm.
underlying technology dictates or governs the way the economy and the speed and the transaction and the accessibility and the peer-to-peer interactions, and kind of provides the ecosystem that all the other tokens that are built on top of it can basically be governed by. And it's just almost like a bunch of NASCAR tracks. I just, in my mind, I think of all these different NASCAR tracks, or all of these different ecosystems, or rainforests or jungles that are in different continents, and they're all different blockchains, and they all have animals, and they all have ecosystems, and they all have these circles of life in them. Those are all like blockchains. So when you finally get into crypto, you actually find yourself investing in all these different ecosystems, and all these ecosystems have their own little tokenomics, their own little econ rules that are dictated ultimately by the underlying blockchain that they're built on top of. So I'll kind of stop there before I go too much further with my
No,
metaphors.
I like metaphors work really well for me. We're talking about ecosystems. That's
Yeah.
perfect for me. That helps me understand it. And so, the part I'm trying to wrap my head around, and you're doing a great job explaining it, by the way. For someone to be successful in crypto, I mean, how does one know what are the right ways to invest, or how do you know what's, and I'm going to pardon my language, it's the wrong thing. How do you know which coins are the right ones? Like,
Yeah.
that's the part that confuses me. Like, because obviously some people are great at this. They've made a lot of money. Some people have lost everything in crypto. So I'm just curious, what's kind of those key indicators?
Yeah, that's where the playing field becomes level, and whether you understand code or not. I'm not a coder. I'm not a software guy. I'm not a developer. I don't have that kind of training. You just have to become, like you do in any other asset class, real estate, stocks, precious metals. You just need to understand how to kind of lift the hood, kick the tires, and understand what makes a great investment and what doesn't. And while this could turn into a 2-hour training course, I'll just kind of give you like the two or three morsels I think that would just really change the game for anybody listening. The first thing I would look for when I'm looking at a particular cryptocurrency is the actual value that it brings to the market. Some people might call this the utility. Like, what does it do? Um, is it a meme coin that is basically a joke on something in pop culture, and or it's a dog coin? A lot of people listening probably own a lot of Shiba Inu and they wish they sold it a long time ago. Like, there's stuff like that, and it has value. There's basically entertainment and community value, but when you're trying to think about like true capital allocation and profit taking and having a strategic focus, whether it be short term or long term, you want to look at what it does. So another great example of utility is one of my favorite tokens is called Chainlink, and I'll just use this particular token as our talking piece around your question. Chainlink is an Oracle service, and it basically connects all the blockchains together with each other so that they're not all these independent island nations, but they can have what we call interoperability. So all the train tracks now can connect, and we can actually have a better commercial value globally in the crypto industry. Well, for a long time, and still to this day, Chainlink was the only show in town when it came to interoperability. It's the largest of its kind. I think something like 83% of blockchains use the Oracle services that the Chainlink protocol provides. And so um, when I discovered that back in 2019, I started investing heavily into it. I started dollar cost averaging into that at around a cost basis of around 89 cents on average. Well, by 2021, it was at $52. So that
Ooh,
one token was up about almost 11,000%.
wow.
So that's life changing money for a lot of people. And that was just one token in my portfolio at that time. And so when you start looking at what does it do, and then you start looking into the future, you don't have to be a soothsayer or a fortune teller, but you just have to go, okay, like where are we headed here? And you really just need to be able to A, identify the utility, B, is the utility or the value that that thing brings to the market something that you can kind of look out into the zeitgeist and go, oh yeah, this is going to make sense here in 6 to 18 months. That's just short-term thinking. If you start thinking long-term like Bitcoin, and you start hearing politicians say we're going to back the dollar with Bitcoin, even if it never happens, like you got to go, well, that speculation alone is going to be the thing that allows that value to go. Or if you start hearing murmurings of the largest hedge funds in the world trading Bitcoin on Wall Street, you start buying Bitcoin. So there's there's just the fundamental stuff. Like you don't even have to know how to read charts and red candles and green candles to be able to look at the fundamental value of a particular project. So that's where you start to just really dig in and start investigating things like what do they provide a white paper that you can read? Can you see how many tokens that they've put into circulation? Because that's a big part of it. How many tokens have not hit the supply, or how much of the supply has not hit the market yet, because that could have like an inflationary reaction to the value of the currency over time. How big is their community? Do they have a raving fan base
Mm,
already? If so, that's awesome. That's a
mm-hmm.
huge valuation metric, because that's going to create more. The bigger the community, the more fervent they are, the more people they're going to go recruit, the more buyers there's going to be. Buy pressure equals up in price. So those are some of the fundamental things that I look for. And then you can either create a really complex approach to crypto and go try to own 20 to 40 different tokens, or you can simplify the game and go find 5 or 10 that you can really know and own and understand what they are. And that's where I would recommend most beginners starting, is just having 5 to 10 that they can really understand and keep track of. And you'll make all the money you need to um, in those couple of handfuls of tokens.
Wow. No, that's an interesting way to think about it, and that breaks it down, especially for the beginner. So, for someone that's like, okay, Josh inspired me. I'm getting this. I got to put my feet in. I got to get my feet wet. What would kind of the first few steps be to even? I mean, I'll be honest. I don't even know what would I need to do. What would the first three steps be to invest in crypto?
Yep. I tell beginners it's time to pull the sword out of the stone.
Mm,
If you are familiar with the Arthurian legend of the sword and the stone. And so the swords, the tools that you need to be successful in crypto are threefold. There's 3 accounts. People are always asking, what account, what platform do you use? So the first platform is a central exchange. The first sword, if you will, is a central exchange account. This could be popular in America, would be Coinbase, Kraken, Robinhood, places like that that allow us to on ramp and off ramp to and from fiat currency. That is, I can connect my bank account, my traditional bank account. I can send money in. I can buy crypto on their catalog of listings that they have on the central exchange. And I can also sell there and resend my money back to myself, cash out, if you will. So central exchanges, they're a necessity until further notice. The second platform or account that you want is a hot wallet. That's your second sword. A hot wallet, hot meaning it's connected to the internet. It's a Google Chrome plugin or a mobile wallet that allows me to actively manage, move around, and self custody my crypto investments. And that's a very important distinction. A central exchange account is not self custody, that is a custodial account. A hot wallet is the true form of active self custody, where I and only I have passwords and backup phrases and things that allow me to custody my crypto and no one else. And then the last is similar, but it's called a cold wallet. And a lot of people have heard of those. Those are your hardware devices that are offline, not connected to the internet all the time,
mm-hmm.
where we kind of use them like it's kind of like burying the cash in the Folgers can out back in the yard. Like nobody knows it's there. They can't get to it. And if I need it, I can go get it. That's my ultimate expression of self-reliance and self-sovereignty when it comes to the treasure chest side of crypto. Well, those are the 3 swords in the stone. And once you pull them out, you're like, holy cow, I have this power in my hand. But the next step is like, wait a second, do I know how to sword fight? It's like this market is not friendly. No
Yeah.
market is friendly. A market is designed to kill the weak and to
Mm.
promote the powerful. And so, as an investor, you really need to know how to sword fight. You need to learn the skills and the vocabulary. And what sword fighting looks like is just that in crypto. It's understanding how to review, analyze, evaluate what it means to create value and to have a creative up movement in price, and to have a profit taking strategy. A lot of people just get in and are like throwing money at stuff. What you really need to do is reverse engineer it and back out of the economics and go, okay, I'm going to put $100,000 in here. And when it gets to this, I'm taking 20% off the table. When it gets to this, I'm taking 30% off the table. And when it gets to this, I'm taking 30 more percent. And having a staircase, like we take profits on the way up in our community. And that's the big part that people miss out on is they round trip their portfolio. They make all this money. They're rich on paper, but they never realize their profits. So
Mm.
that's a huge, huge kind of piece of the rock there is
Mm-hmm.
sword in the stones, but you got to learn how to sword fight. And so when you're first learning, just get ankle deep in the water. You don't have to do a cannonball into the deep end.
I like these analogies. I'm the person that learns best that way. So you're really speaking my language. So, for somebody, would it be helpful for someone that's just starting to join a group? I mean, for example, is your group just for experts or do you have some beginners in there that are just
Oh
kind
no,
of trying to learn?
it's geared for people who are brand new, crypto
Okay.
curious,
Okay.
or maybe you've been doing it, but you really just haven't cracked the code.
Got it.
Like
Okay.
most people in their first bull run lose money. And then in their
Okay.
second bull run, they make some money, but they're like, I could have done better. And the third one is usually when they make lifetime, life changing
Mm.
money. But then if you're in your first bull run and you want to kind of skip the dummy tax, then just don't invest alone. Join a mastermind, get some mentorship. It doesn't have to be mine, but like it's just like anything else. Like crypto's not different than real estate or running a business or earning. It's learning a skill. And I'm I went to Alabama public schools. If I can do it, anybody listening to this can do it. You just need to learn some new buzzwords. You just need to, like, you're probably 3 to 5 hours away from just going, okay, I got this. I know how to, but there's still like that whole 10,000 hour of mastery that's ahead of anyone moving into a new asset class or skill set. But like, that doesn't mean you can't win on the way there. And that's the big thing that a lot of people experience when they invest in groups as opposed to by yourself. Because the internet has all the data that you'll ever need. Sequencing it
Right.
properly is the
Correct.
part that nobody can figure out on
Right.
their own.
It's not always best to do it on your own. And so
Yeah.
I'll put this in show notes, but if someone is interested in finding out more about your group, where would they go?
Yeah, just go to cryptoyall.co,
Okay.
and I have a little case study there. They can
Hmm.
join my email list and access my video case study. It's about 13 minutes long. It explains everything. And if they like what they see, they can just schedule a call
Okay.
with me. If they just want to join the email newsletter and not schedule a call, they can totally do that there at cryptoyall.co. Or they can email me directly, josh@cryptoyall.co. It's my personal email. I'm not in some ivory tower. If you want to have a legit, capital allocator investment discussion or some level of sophistication with a non-scammer, email me directly. I'm happy to answer any questions you have. But yeah, those are the best 3 ways to approach it.
Awesome. Thank you, Josh. And that's one reason I wanted you to be the person speaking about crypto because you're so approachable. I mean, really, I feel like a conversation with you would be just like, hanging out with a buddy, enjoying a good meal.
Yeah, I love
It's
this.
comfortable. So I feel like for a beginner, you'd make it easy where I feel like, there's probably a lot of people that are scared because there's not
Yeah.
people like you that they think are accessible, and it's a scary thing to jump into. So just to make you a little bit more human, I know you're an expert at it, but have you made mistakes? Have you lost money in crypto?
Oh gosh. Yes. I've been scammed.
Have
I
you?
have made bad investments. I have probably lost more money than most people are willing to invest on their first volley in crypto. And that's, I think that's part of the reason, kind of like fine wine and good bourbon,
Hmm.
it's going to have to sit there and ferment a while. I've
Mm-hmm.
fermented through 3 cycles.
Wow.
So what I provide my community is kind of that dummy tax. There's a lot of people who approach crypto and they don't know that they're getting scammed, or they don't know that they're investing in something that has bad economics built in. And it's just, you don't know what you don't know. That's the biggest villain in crypto, and honestly any asset class. Again, it's not any different than anything else, but if you don't know what you don't know and you want to overcome that, then hopefully crypto y'all can be the
Hmm.
antidote.
Well, and I am curious. You mentioned getting scammed. That happens in my industry as well. Is there
Yeah.
anything someone could be on the lookout for to even know
Oh
they're being
yes,
scammed?
gosh, great follow-up question. So the most notorious scam out there is what we call crypto pig butchering. It sounds
That
terrible,
sounds
and it is terrible.
awful.
It's awful. And what it is these veiled internet characters.
Okay.
If you know anything about catfishing,
I
if you've ever
do.
heard the
Yep.
term
I have heard
catfishing,
that. Yep. Yep.
so take that and exponentialize it by 10 and insert a financial variable. So people pretend to be someone they're not. They provide photoshopped results of 100x investments in 48 hours, and they make all these promises. It's silver bullets and rainbow chasing at its finest. And they invite you into a WhatsApp group or a Telegram group, and uh, oftentimes they're offshore somewhere where the jurisdictions are outside of your jurisdictions from a law enforcement perspective. But the thing about crypto that is both awesome and extremely dangerous is that smart contracts, the transactions are immutable, meaning you can't dispute my crypto charge. You can't reverse it like you can a credit card company. um, and so if I send you $10,000 because you promised me it will turn into 100,000 in the next 72 hours or 7 months, it doesn't matter. I can't get it back.
Oh,
And so what happens is they create these fake dashboards, literally like a ghost town online. I can log in. It's like all
wow.
fabricated. It looks like a legit entity, and I'm watching my quote unquote money grow, and and greed sets in, and like I'm like, yeah, let's let it go some more. And then you try to withdraw and they'll give you a little taste. They're like, oh, we can send you $1,000 back, but we actually need
Wow.
14 days and a little bit more heads up. And you also have to pay taxes. So you need to send us $7,500 in order to cover the taxes. And then we can give you your 140,000. And then people send another 7,500.
Oh,
And that's the pig butchering part. Just like it's like the village that eats the entire animal. And so they just keep draining people because of their naivety, unfortunately. And that stuff is what a lot of people, I speak to 3 to 5 people a week who've been victims of that scam, and they're great people.
oh,
Um, and it's just literally the biggest enemy, like I said, is you don't know what you don't know. And that level of ignorance that is nobody's fault except the individual, that they just kind of walked into a
right.
trap and they didn't know it. And so they were really trusting. And so, yeah, that's what I want crypto y'all to be the antithesis of,
Mm-hmm.
is a trustless environment. Crypto is about having a trustless, where you don't have to trust a third party intermediary to grow your money. So what I do is I teach a man how to fish so that he can eat for a lifetime. And so what we do is we acquire skills and we acquire market intel, but I'll never ask you to wire your money or send your money to me so I can invest it for you. I'm going to teach you how to do it yourself.
Wow. Well, good for you, because I didn't realize it was that big of a problem. I had no idea. So, I mean, obviously, to sum it up, it sounds like one of the biggest red flags is someone asking you to wire money. It sounds like any legit group or anybody that's a legit mentor won't ever do that. Am I correct in saying
Correct.
that?
Yeah.
Okay.
Yep.
But I can see where somebody new, I mean, I hate to say it, I'm new, I'm excited. Someone comes in
Yeah.
at me and says, "Hey, I can make you a bunch of money. Just wire me this." I can see why it would happen, and it's a
Yeah.
shame.
And it's generational too. I think a lot of the baby boomer and Gen Xers we're conditioned to have a financial advisor. We're
Mm-hmm.
conditioned to have
Yep.
someone trading our assets for us. And that conditioning has just kept us from scrutinizing
Right.
where
Where we
we
should.
send our money over
Wow.
blockchain.
Wow. So, I mean, kind of along those same lines, what would you say are some of the biggest myths or misconceptions about crypto? And especially with your group, how do you address them?
Well, crypto is not a scam.
Mm-hmm.
Um, if you say that, you have to be willing to say that Wall Street and stocks are a scam because Bernie Madoff and Enron pulled off,
Mm-hmm.
the largest hedge funds in the world sent their money to Bernie Madoff. So, um, you and I could sit here and make lists of scams in every asset class. I know of gold mining scams. I know of real estate scam. So it's not a scam. It's a technology and it's an economy and it is a risk on asset, just like anything else is besides the US dollar. Anything that you invest in besides the US dollar or US treasuries, basically, until further notice. And I could probably get on a debate stage and debate you on why investing in the US dollar and treasuries is more risky than crypto, but that's a whole other conversation. So um it doesn't have to be hard. A lot of people want a vending machine asset that they can just set it and forget it. And crypto can be that. Like if you just want a simple crypto strategy, buy Bitcoin and never stop buying. Just never stop. Never stop and think about it on a 20 to 30-year time horizon. But don't expect to be financially independent from Bitcoin in the next 6 to 12 months. It's just not going to happen because it can maybe double from where we are right now. Um, Over time, yes, it'll be the apex or already is the apex asset in the world. But if you're looking to have an active and a productive investment strategy, then you need to skill up. And it's just a matter of, like I have a friend who is learning how to weld. I have friends who are learning how to be software developers. I have clients who have learned how to do phone sales. It's just what skill do you need to acquire? It's not one of those things where you just open an account and you start throwing money at it. You need to know what you're doing. And so
Mm-hmm.
crypto is just, if it was that easy, it would not be a legitimate
Right.
asset
Yeah.
class.
Right.
So those are probably the things I always like to dispel, is that it's not a scam, but it's also not just a silver bullet, get
Mm-hmm.
rich quick scheme. You need to know what you're doing.
Absolutely. And you obviously do. And I'm curious, do you do this full time, or leading crypto y'all and doing crypto? That's your full time business.
Yep. Yeah, I
Wow.
do own other things. A lot of people always ask, are you into other things? I invest in hedge funds that buy e-commerce companies. I'm partial owner in a fintech business that recovers failed subscription payments for
Wow.
companies. Own real estate. Crypto is just my passion. Crypto Y'all, like I said, is a boutique consultancy and mastermind group. So it is a business. It has a P&L. It has a balance sheet. And then all of the things that I teach and what I call the crypto flywheel method are things that I exercise in my own portfolio every day. So yeah, I love it. It's a full-time gig for me.
Hmm. Well, there's nothing better than that, finding a way to turn your passion into what you do full time. That's awesome.
Yeah, totally blessed in that regard.
Absolutely. Well, and I kind of want to dive into how you and I met. I know it's been a while now. I think it's been well over a year. And originally you came to me, and I'm curious. I know, we had talked about different strategies, and some of your members have used capital stacking
Yeah,
for crypto. Did you ever put to use that strategy yourself?
absolutely. Other people's money, OPM has been a theme that I subscribe to for a long time, but I had always done it until I was introduced to you through your TikTok content. I didn't realize you could do it the way y'all do it. I always did it in more traditional, slower means, I guess is what I would the way I would say, home equity lines,
Mm.
business lines of credit, although that's what you do is business lines of credit. But I was doing it, just through the traditional banking relationship that I had. I didn't realize that there was a lot more accessible ways of doing that. And so, um, I'm a guy who loves creativity. I love the fact that there are more ways up a mountain than just the trailhead that I had my eyes on for 10 years. And I'm always looking for alternative opportunities. So yeah, the other people money, the OPM strategy is the whole capital stacking thing that you and True Finco introduced was really huge and has been huge for many of my members as well, not just me.
Yeah, no, I agree. And it's interesting. You and I are a little bit in similar worlds. I think that not everybody understands it. And it's
Yeah,
all about education and kind of just
totally.
ripping those curtains back because it's true. I mean, I think most people are still living that belief that they have to get the funding through the bank and go that old fashioned route as but I'm slowly breaking that. Slowly.
Yes.
Uh Beyond as using it for an investment, what are some practical everyday uses for crypto that people might be surprised by? I know you mentioned real
So
estate.
yeah, so for example, well, so this is where it all becomes a house of mirrors, like in a
Mm.
good way. But like you've popularized capital stacking. Well,
Mm-hmm.
you can capital stack inside of crypto as well. So for example, in 2020, I used Bitcoin as collateral to buy two rental properties, real world real estate assets, and they were turnkey real estate investments, meaning they already had tenants, they were already renovated, they were already, I didn't have to lift a finger. All I had to do was start receiving checks. So I just pointed that income towards the collateral, and now I own my Bitcoin outright plus the real
Rentals.
estate properties.
Wow.
So I was able to use leverage
Yeah.
using my crypto assets. And you can use the crypto assets to buy real world assets, or you can go buy more digital assets, right? Even NFTs, those crazy alien toxic monkey pictures and things that people own. Like I own land in a metaverse called the Sandbox. It's this popular kind of incumbent metaverse project. I'm a landowner there. There's a fixed number of land parcels in this video game that I own, and I can literally I can borrow money against it, and I can pay it back. And I could borrow literally like stable coin cash equivalents. I can go buy Bitcoin with it. Bitcoin price goes up. I can sell some Bitcoin, pay the loan off against my land. And, so there's all kinds of that stuff. But then there's other awesome things. Like I have a new crypto project called Grass, and Grass allows you, get this, you can sell your unused internet bandwidth. So you can create passive income. You can have the Grass node, which is really just a Google Chrome plugin, and you're just connected. Like right now, while you and I've been doing this podcast, I've earned money selling my unused bandwidth that I'm not using here, that I'm paying monthly to Spectrum Internet. Well, the unused, I'm paying for that bandwidth no matter what, whether I use it or not. So what this cryptocurrency protocol has realized is like, wait, it's the age of artificial intelligence, and AI needs more what we call GPUs, or we need more bandwidth. And so let's help people resell their unused bandwidth to AI protocols that need it for all of the artificial intelligence computing, speed. And so you just put the thing on your computer and now you're earning. So like there's all of that stuff. Like just people have no idea. The world is tripping into the era of blockchain and crypto, whether you like it or not. It's coming. And so there's all kinds of uses that it basically, if you can think of it like your farm that you have,
Yeah.
there are cryptocurrencies and blockchains now that would allow the way you manage your farm to be more profitable, more efficient, and less time sensitive, or less effort. there are practically a use for almost every sector of the economy that we live in. So anyway, I could go on for hours, but it's permeating every walk of our
Wow.
life.
Well, clearly I need to understand this more because I would love to find ways to make that work for the farm because it's not an asset, but it's a liability in all senses. But it's a liability of the heart. I will be honest. I still, it could be the biggest liability. I'd never trade it for anything because it brings me a peace and sanity that nothing else can bring me. So I'll take it. But that is interesting and mind blowing. Absolutely mind blowing. Um, I'm curious. You know, you've shared a lot, and we could keep going on about this for hours. But I know you have a day, and I want to let you get back to it. Is there anything else that you feel like somebody new to crypto should know, or any big tips or advice that we've missed today?
Yeah. This is more tactical. So for the people who've been listening who are crypto curious and they're kind of over the confidence hump and they're ready to take action, my biggest tip would be when you invest in crypto, you want to always focus on the narratives. Uh, and it's exactly what it might sound like. Every market, whether it's crypto, stocks, or whatever, has a narrative or multiple narratives. I could list easily 20 to 30 crypto narratives that are active right now, but I'll list probably the top 5. And when I say a narrative, I mean a category or a niche or a particular genre of
Mm-hmm.
crypto that is hot and it has hype. And ultimately, markets are emotional because humans are emotional. So you got to think, okay, where are humans most likely to emotionally invest? That's
Mm-hmm.
where I want to put my surfboard in the water. So the big narratives right now are AI,
Mm-hmm.
obviously. Ever since ChatGPT was launched in
Yeah.
January of 2023, AI crypto has been hot as fire. So, and it still will continue to be.
Mm-hmm.
So AI, real world assets, we've talked a little bit about those today.
Mm-hmm.
That is literal assets in the real world that are being tokenized, supply chain, cell phone towers, real estate. Um, there's video games. The video game industry is huge. It's a multi-trillion-dollar industry, and it's coming to blockchain. And there are many AAA gaming studios that are just literally about to
Wow.
launch games that are going to take over the planet. And one of those have to hit. Just one of those have to become the next Fortnite, and everything's going to be different. So you want to be in on gaming, even if your game token doesn't become the next Fortnite. You have 10x, 100x capabilities there if you have a good profit taking strategy. A couple of others would be Bitcoin layer 2. So the Bitcoin network is starting to create more networks or more layers on top of itself. So investing in that world. And then I guess I would say lastly, layer 1 tokens. A layer 1 token is just another fancy way of saying a blockchain. So there's all these different blockchains that are always launching that compete with Ethereum. Ethereum was launched in about 2014. It was first to market, it's first of its kind. And ever since then, everybody's complaining about how expensive and slow it is to work on that market, yet it has 68% of market share. Well, every year, there's multiple new layer 1s that are launched with the new quote unquote angle. And if you can get in early on a layer 1, venture capital money loves layer 1s and they usually prop them up really well and they end up being really incredible investments. So those are like if all you did was
Mm-hmm.
invest in one of those 5 narratives or create a portfolio around them, you probably win big in this cycle.
Wow. Well, thank you, Josh. I feel like I've got to invest in crypto after this conversation. I do. I feel like I'm missing the boat. And part of why I've missed the boat is lack of understanding, which is
Sure.
a common problem for so many people in many areas in life. But it's been enlightening. And not only did you do such a great job of breaking down what crypto was, but you gave some very tangible advice that even someone that's already in crypto could take advantage of. And I never asked you to do that. So I really appreciate you doing that, because I think a lot of people will find value in that. You clearly know what you're doing.
Yeah.
And I love your passion for it. It's amazing, because it's not everyone could take what you're doing and find such passion in it and find you've done something amazing. You found a way to take something that's complicated, make people understand it, and you've found a way to really help people with it. So that's why I like you so much, because that's what I'm trying to do in the funding world. So I really appreciate you taking your time and
my pleasure
doing that today. And it's been amazing. And for all of you listening today, I hope that you gained some new understanding in crypto, whether you're brand new to it and it opened your eyes a little bit and gave you a great understanding, or you're an experienced, I don't even know the right word, I don't even know what's an experienced crypto investor. Yeah, there you go. And you learned some new tips and tricks from Josh today. I hope that it was an insightful and inspiring episode. And I definitely encourage all of you to check out Josh's group, Crypto Y'all. It's full of just amazing people. And I don't say that lightly, because it takes a lot for someone to really impress me as a good human being, and his group is just full of really good human beings. So if you're new and you're feeling a little afraid, like, I don't want to join a group, they'll all be intimidating. Nope. I've posed some of these stupid questions on them as well. So I'm telling you, you'd be right at home. So Josh, thank you again, and thank you for everyone listening, and until next time.